Tom Forte joins us on the CNBC Newsline. DA Davidson analyst, covers Amazon. Stock is up, Tom, 8.4% or so. How do you see this changing potential investor base and the case around the stock?
Yeah, so I do think that the 20-for-1 stock split news is a positive for Amazon to the extent that it'll materially lower the per share price and can attract a lot more consumer buyers. The real interesting story last quarter was the faster growing margin, high margin businesses. Consumers looked at that and investors looked at that and were encouraged and bid shares up rather than worrying about the slower growing e-commerce. So to me, this 20-for-1 stock split is also good news for the stock.
Tom, I mean, it's hard to kind of read minds here, but there's, relatively new CEO at Amazon. The stock has struggled. It feels as if that they're in search of a little bit of a story and traction among investors. Do you see that, the fact that they would come out with this now at all interesting? I mean, they're going to be reporting earnings before too long, and they came out with the news here.
I do think kind of what you're hinting at, Mike, is that the company is perhaps looking for additional ways to try to improve shareholder performance and improve the stock price. So I agree that this isn't the historical or recent historical, which is, revenue growth and earnings growth and things of that nature. So, perhaps they're pulling an old lever here to drive share price, but I think that's more than okay.
What about the buyback? Any significance there? It looks like they're doubling the buyback authorization to $10 billion, one that they've had in place for years.
Great question. So the way I think about the buyback is such. So with higher margin, better cash flow from cloud computing, advertising, they just broke out their advertising service revenue for the first time last quarter. It gives them more free cash flow to buy back shares. And the fact that they're raising the buyback suggests that not only they think shares are undervalued or underappreciated at current levels, but potentially that they're going to invest less in square footage for fulfillment centers on a near-term basis. So I think that's also good news, higher authorization for the buyback.
You think $10 billion is big enough to really represent a significant gesture in those directions?
Yeah, Mike, the way that I look at it is incrementality. So I think that the fact that they're going to, announce a $10 billion buyback shares, and then, who knows, maybe at some point there'll be a perpetual share buyback company like an Apple. So I do think it's interesting that they're going to devote more free cash flow to buying back shares.
What's interesting is the market had this fierce rally today, Tom, and the NASDAQ did really well. It closed up more than 3.5%, the S&P more than 3.5%. Amazon rallied, but weaker than the market, up 2.4%. As Mike mentioned, it's been an underperformer. I think it's about 26% off the highs. What is holding this stock back?
Well, I think that, so the story before today is called relief rally on, a pullback in oil, is that for companies like Amazon that do a lot of delivery, and they've increased their first-party delivery efforts for years now, the spike we've had in oil prices is a severe negative. And to the extent that it may take discretionary income out of consumers' pockets, I mean, they still have a large e-commerce business, and if they're doing a lot of the delivery themselves, those are negatives for Amazon. So I'm not surprised that it had underperformed relative, given the spike we've had in oil prices.
Tom Forte, we appreciate you jumping on the phone on this news. 20-for-1 stock split by Amazon. Stock's up 7.5% after hours. Thank you.